Hi everyone, welcome back. It is now finally 2023. 2022 is in the books, and it was a terrible year for the miners, for Bitcoin, for the markets in general. So hopefully we'll have a better year this year, but time will only tell. So in this one, we're going to look at the miners which are most likely to fail in 2023. There's a couple of them. We'll get into all the numbers here, and it's based on the current data that we do have. We're still waiting. Well, we're going to wait for a little while at least for Q4 numbers to come in, but that will give us a little bit more of a definite answer as far as which ones are possibly going to go under. Okay, we're also going to take a look at the miners, how they did this week compared to Bitcoin. And it's a little surprising, so we'll look at that. We'll also take a look at Bitcoin really quick and Ethereum. The markets were closed today for the holiday, and we'll call it a day. So as always, you guys are aware, not financial advice, for entertainment only. Do your own research. I'm invested in the following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button, subscribe. Helps me out tremendously. So let's take a look at Bitcoin here really quick, and then we'll get into the other news. So Bitcoin right now is at 16,676. It finished out the day. Go to the daily chart here. We're up 0.33% on the day today. We closed at 16,666. Not a good number, but we closed. That's where we closed at. Our high was 16,789, and RSI right now is at 46, and it's actually price is lower than it was prior here, a little bit, not much, but it's still lower. So on the daily chart, we still don't know which way we're going. On the 4-hour chart, we can see RSI has fallen down to 55. Last time we were at this range was possibly back here. We were still higher in price at that point. So it's a little bit more bearish on the 4-hour. 1-hour chart is looking a little bit better. We are at 50 on the RSI. Last time we were back here. Price at that point was lower by about $90 or so. So it's looking a little bit more bullish. But we'll see how January is going to play out for us. Ethereum also was up today. It was up a little bit better. It was up 1.15% to a close of 1,213 and a high of 1,224. And it's pretty much looking the same way as Bitcoin is right now. RSI is at 61. Last time we were here, was right around here. Price was at that point higher on the forward chart, so it's looking bearish. On the 1-hour chart, it's at 57 right now. Last time we were back here. Price was lower, so I think it's going to be a little bit more bullish on the 1-hour chart. So we'll see how this continues on into this week, especially when trading starts opening up tomorrow. We'll see where things end up at. Okay, miners, we already covered those guys for the past week, closing on Friday, so we won't get into that, but we'll just go into miners that might be in trouble right now. But before we do that, let's take a look at the network hash rate. It has been going up still. So right now on the 1-day chart, it is at 274 million terahashes per second. If we look at the 7-day chart, you can see it here. It's been continuing to go back up, and we are at 256 right now for it. Okay, so miners are getting plugged in, energized, and mining. And let's take a look at the metrics that we do have in the miners and which ones I think might be in trouble. And then we'll get into the weekly Bitcoin versus miners. Okay, so here is all of the data that we have on the miners right now. The big things we're going to take a look at is the current ratio and the debt to equity ratio, and also look at current assets minus total liabilities, see where that stacks up at, and we'll kind of discuss these as we go through them. So starting out, I did this by getting the current assets minus total liabilities in order from basically highest in debt to lowest, or ones that are actually positive on this chart. So the first one is obviously Core Scientific. Core Scientific is going through Chapter 11 bankruptcy. We know about that one, so that one's pretty much set in stone. Marathon is second on the list here. What you guys pointed out, a couple of you have pointed out that their debt is actually not due until 2026, and currently they're paying 1% interest rate on that loan, I believe, until that point. So that makes me think that they are more than likely going to survive this, especially if we get into a bull run here, possibly by the end of next year and then into by the end of this year and then into next year, as we get closer to the halving event. Right now, their current ratio is 5.272, which is pretty good. So they got plenty of total current assets to pay total current liabilities. And then if we look at the debt to equity ratio, it's 1.36. So this is the part that's a little concerning here. But if they have 4 years to pay that debt down, this should be fine, I believe. I don't see a concern there. Unless Bitcoin goes into another bear market this year, well, then that might really be painful for everybody involved here. Next is TeraWulf. So TeraWulf is a new one that has gone on the scene here this year. They are right now, let's take a look at TeraWolf really quick, and we'll see where they are at. So the numbers that we have for them right now, they are at, let's see, what's their petahash right now? Hash rate, they just got up to 1.3 exahash in October, and then November is 1.34, but they were mining at 192 petahash this whole year, well, pretty much this whole year. So they have been building out and finally getting miners installed. They are supposed to get to 5 exahash right now. So they still have a ways to go to get there, but they do have a lot of debt involved in this. Let's take a look at the debt. TeraWolf has, let's see here, total liabilities of 188 million. Total current liabilities is 105 million, yet total current assets is only 16 million. So that's the part that's really concerning here. Current ratio is pretty low, 0.153, and their debt to equity ratio is 1.543 as well. If we take all their current assets minus total liabilities, we get a negative 171.9 million. So they're going to have to do some creative financing here, potentially to be able to weather the storm here in 2023. Now, given Bitcoin stays where it's at, it's going to be tough for them. Even if Bitcoin goes up, it might be tough. So I would put them on a highly likely scenario where they will either have to default on possibly some of the loans that they have on this, so the debt, or they might be able to squeak by. But right now, it's not looking good for them. Next is Greenidge. So Greenidge has current total assets of 54 million. This is from their Q3 report. So like I said, we're still waiting on their Q4 reports for a lot of these guys, and we won't get it until sometime in possibly February, towards March, maybe even. We'll get this updated when it does happen. But right now they have 54 million in total current assets. Total current liabilities 98 million. Current ratio of 0.554, which isn't too great. Basically, they have half of current assets to pay off total current liabilities. And then total liabilities is 217 million. Equity is only 89 million. That is a debt to equity ratio of 2.43. So that's not too bad. But current assets minus total liabilities is 163 million in debt. And we actually got some news. So I missed it. They reported the 20th of December, and then they just reported recently here the 30th or the 31st of December as well. Let's take a look at that right now. And I think this is really concerning for anybody that's involved in Greenidge right now. So let's take a look at that news that we have here. This was reported on December 20th, sorry. So lender negotiations update. So Greenidge Generation executes term sheet with secured lender NYDIG regarding debt renegotiations, provides liquidity update. So here's the breakdown of it. They have entered into a non-binding term sheet with NYDIG regarding approximately 74 million of debt, contemplating the following terms. So this is non-binding. That's not set in stone yet. We haven't received anything that would tell us that it is. NYDIG would purchase miners with approximately 2.8 exahash of mining capacity. That's the majority of their miners. Greenidge would enter into a hosting agreement with NYDIG for approximately 2.8 exahash of mining capacity, which would result in a material change to Greenidge's current business strategy and result in Greenidge largely operating miners owned by NYDIG rather than operating miners owned by Greenidge. So that's not good. They're going to be making 5%, 10% margins on that possibly, if not less. We know that the hosting side of things has not been great for some of the miners. Let's see here. In exchange for the purchase of miners and transfer of the mining infrastructure and credits to NYDIG, NYDIG would agree to a reduction of approximately 57 to 68 million of debt. We don't know exactly where that's going to fall into. And then Greenidge will be pledging substantially all of its unencumbered assets to NYDIG to secure the remaining balance of the loan. So there's still quite a bit left on it. Greenidge would retain ownership of the miners with capacity of 1.2 exahash. So not a lot there. Now, any change in the terms reflected in this non-binding term sheet could have a material adverse effect on Greenidge and its stockholders and could further impact its liquidity and its ability to continue as a going concern. So that is concerning, right? Continuing on here, liquidity update. So there remains uncertainty regarding Greenidge's financial condition as substantial doubt about its ability to continue as a going concern. So that is not good. The company's average monthly cash burn rate during October and November was approximately 8 million, of which approximately 5.5 million per month was associated with principal and interest payments to NYDIG. Further, the company expects to have a similar cash burn and similar payments to NYDIG during December of 2022. So they are burning through cash like crazy. There is substantial likelihood that Greenidge's independent auditor opinion will reflect a going concern qualification in their audit report for the 2022 financial statements. That's not good. That's going to have potentially investors leaving. Greenidge's board of directors has engaged in active discussions about the potential for and timing of a voluntary bankruptcy filing in the event that, number one, Greenidge determines that potential sources of liquidity will not be available to it, and number two, Greenidge's remaining available capital does not allow it to meet its obligations as they become due, or number three, Greenidge defaults on any other material contracts or indebtedness. The company continues to actively explore raising additional equity capital and to engage in discussions with its lenders. So that is not good there. They also provided an update here just this was December 23rd, it looks like. And here is the important parts of it. So on December 23rd, Greenidge and all of its subsidiaries that they have and NYDIG have entered into Master Equipment Finance Agreements and related loan documents. The loan documents pursuant to loan documents, Greenidge subsidiaries owned a payment of principal and interest in the amount of approximately $1 million due on December 25th. Pursuant to the NYDIG waiver, the lender parties agreed that failure to pay the December 25th payment when due would not be an event of default if that payment were made in full by January 10th. So they're giving him a little bit of an extension here. So that's NYDIG. You also have B. R. Riley doing the same thing. They're giving him a little bit of an extension. So failure to pay the approximately $1.5 million payment or principal and interest due under the BRCC note on December 20th would not be an event of default if that payment were made in full by early of January 16th, 2023. That was $1.5 million there, $1 million to NYDIG here on this one. If we add in the other ones, it's like, almost $7.5, $8 million just in loan payments alone. And then this part here, NYDIG would purchase miners. So this is going back to that previous one that we just talked about here, would purchase miners with a capacity of approximately 2.8 exahash for approximately $50 million. So now it's down to $50 million. That represents about $17.85 per terahash on those miners. So that's pretty low. Next is if the purchase of the miners was closed by December 31st, Greenidge estimates it would record a loss on the sale of the miners of approximately $60 to $70 million arising out of the difference between the carrying value of the miners on Greenidge's books and the amount of debt canceled upon their sale. Based on this information and other factors, Greenidge currently expects a total long-lived asset impairment to the crypto and power segment in the fourth quarter, including the write-down of the miners expected to be sold to NYDIG of approximately $90 to $110 million. Ouch. So that's not good there. You guys, so this is obviously not good news. We've seen this from others as well. We saw it from, who was the other one? Mawson was another one that was in this kind of boat as well, but they kind of sold some of their assets to CleanSpark. That kind of helped them out a little bit. But we also had Iris here. Iris has not reported yet. We still have the old numbers here from June. So, but they returned the majority of their miners back to their lender as well. So they're also in not a great position as well. So that one is one I would keep an eye on as well. But going back up here to Greenidge, you can see here 163 million still. Even if they paid off some of that debt, it still wouldn't be enough, it looks like. And with them only mining 1.2 exahash, that's going to bring in not a lot. And then the rest of it is going to be hosting. That's going to bring in, like I said, 5 to 10% maybe at most. So they are going to get squeezed on their revenue quite tremendously here when that does happen. Next is Mawson. Mawson, like I said, has sold some of their, one of their facilities and some assets to CleanSpark. That helped them out in the third quarter. You can see here that they did improve their current assets minus total liabilities by 28 million from the Q2 number. So if we look at Mawson here, where's Mawson? Mawson, they had 78 million here in the red. Now they are at 50 million. So that is an improvement. And hopefully they can weather the storm. Their debt to equity ratio is at 0.942 and their current ratio is 0.602. So it's still not that great, but it is improving. So they may have a chance here of escaping this kind of bear market that we're in and possibly being able to get out on the other side, but still a concern there. We want to see the Q4 numbers for them as well, like the rest of these guys, and see where they are actually at the end of the year with all their numbers. Soluna. Soluna has, let's see here, current ratio 0.216. So they have total current assets of almost 6 million here. Total current liabilities is 27 million. That is concerning. They also didn't improve from Q2 to Q3. They went down another 10.7 million in the total, in the current assets minus total liabilities, to 34 million from approximately, was it 23 million that they had at that time in Q2. And their debt to equity ratio is 0.619 as well. So that is not too bad, right? You want that to be under 1, and you want the current ratio to be above 1. So that's still not too bad. But one of those that I would definitely keep an eye on with them. Other concern is that they are getting later and later in providing their monthly updates. That's a concern. Same as we saw with Greenidge. Greenidge is also behind on theirs, which is concerning. Core Scientific is another one that's behind it on theirs as well. It could be that they are just in this kind of tumultuous time right now with trying to survive. So I kind of give them the benefit of the doubt that they will provide those numbers. Hopefully within the next month, they'll get back on track. If not, I'm going to have to start taking some of these guys off. So if Core doesn't provide it, they'll be off along with Greenidge. And I think Soluna might be another one we're short on. We'll take a look at that here shortly. So that's Soluna. Bitfarms. Bitfarms currently has a current ratio of 1.253, which is good. Total current assets 102 million. Total liabilities of 82 million. They did pay down some of their debt here by about 2 million here, looks like. And they have a debt to equity ratio of 0.43, which is pretty good. And current assets minus total liabilities is 11.1 million. So it's not too bad. They have been improving in it, so I think they're going to be fine. Next one on the list is Argo. So Argo is another one that's kind of in trouble now. They sold the Helios facility just recently to Galaxy Digital. They are going to still have the miners there, but they're going to be, Galaxy Digital is going to host the miners for them. So that's going to be an interesting, we'll have to see how those numbers stack up, but that does kind of help them get through this, and I think they will be fine. But we'll have to see the numbers. Again, they're way behind here. Their numbers are from June. They did provide that they will not provide the third quarter results because they're based out of England, and England only has biannual reporting requirements. So we'll probably get something towards the end of the year. We'll see where the numbers come in at that time. But that would be one that I would also keep an eye on as a potential that may not survive. Next is CleanSpark. CleanSpark right now has, let's see here, current ratio of 1.492. So that's pretty good. They have 50 million in assets, total current liabilities of 34 million, total liabilities of 48 million. So that's not bad. And total equity is at 404. So their debt to equity ratio is really good, 0.12. And they are positive as far as their current assets minus total liabilities. They are in the plus. They did improve that. Or no, sorry. CleanSpark. Which one's CleanSpark? This one. Yeah, okay. 2.1 million in positive, so that's good. They improved that by 6.9 million from Q2, so that's good there. DigiHost. DigiHost is current ratio 4.32. I think they're going to be fine with that. Only 11 million in assets, but 2.6 million in debt. And total liabilities of 6.3 million. So they're okay there. And debt to equity ratio is 0.117, which is really good as well, pretty low. They're also in the positive right now of 5.2 million if you take current assets minus total liabilities. That did decrease a little bit, so that is a little concerning here. We want to see how that plays out in Q4. Next one going forward, DMG has not reported their Q3 numbers yet, so that's also concerning there, along with Iris. We're waiting on them to report as well. But at the June numbers, they were at 3.009 on the current ratio. Like I said, that's 6 months ago. We're 6 months back, so I'd probably want to see more updated numbers before I actually make a decision on it. But they do have only, see your total liabilities of 4.5 million, which isn't too bad, which is basically what their current liabilities are. And they have 13 million in current assets. So I think they're going to be okay, depending on how much they've been burning through cash in the last 6 months. So that'll be interesting to find out. Then we got Iris Energy. Iris, like I said, I think I've said this before or in this video, that they sold off not sold off, returned a large portion of their miners back to the creditor. So we'll see how that's going to play out for them going forward. And then we also want to see updated numbers for them as well. So I'm going to hold off on those guys as well until we get more recent numbers. Because based on this, they had 21 million in positive, but we don't know where they changed on it or anything like that. So I'll hold off judgment on that until we get some more numbers, updated numbers. Next one is Sphere. So Sphere has been burning through cash like crazy. If we look at their numbers here, they were at 100 petahash for the pretty much the entire year, except for December. They finally got some miners installed. They are going to be getting to approximately, what is that going to be? 2.1 exahash here in the future. That's been bought and reported. But they've been burning through cash like crazy here, trying to maintain operations and get miners also. So it's where were we? Miner comparison. So Sphere 3D, when did they report? They reported 9:30, so that's okay. But here's the concerning part of it. They decreased their current assets minus total liabilities by 20 million. So they were at 44 million in Q2. Q3, they went down 20 million to 24. If this continues down there, continues like it has in Q4, they'll be down to like 4 million or maybe even less, depending on how much cash they burn through. But right now, let's see here. Current assets is 29 million. Total current liabilities is 4 million. And total liabilities is 5 million. So I think they're going to be okay based on that. Current ratio is 7.15 and debt to equity ratio is 0.025. So I think they're also going to be okay there. But we want to see updated numbers for them as well. Now Hive is at currently 3.74 current ratio. They have 88 million current assets. Total liabilities of 23 million. And total liabilities is 50 million. So I'm sorry, total current liabilities was 23 million. Total liabilities is 49.8 million. So they got enough to cover that with current assets, not a problem. And then their debt to equity ratio is really good too, 0.218. They are improving from Q2 to Q3 by 7 million. So current assets minus total liabilities is now positive 38.8 million. So that's good there. I don't have a problem with Hive. Next is Bit Digital. Bit Digital has a really good current ratio of 19.763. Total current assets of 68 million. Total current liabilities of 3.4 and total liabilities of 4.3. So they got plenty of cash to pay off anything there. So I'm not concerned by them. They did, however, burn through about 9.4 million in Q3. So they're down a little bit here to 61. Probably they were at 70 million at that time, or 71 million, closer to that mark. So that's gone down a little bit. But still, I don't have a fear of them going under anytime soon. Then we got Hut 8, has total current assets 265 million. That includes a lot of their Bitcoin HODL. And then we also have total current liabilities of 27 million. So they have a ratio of 9.56, which is great. And we got total liabilities of 67 million. So they got plenty of cash to it. And they also improved their from Q2 to Q3 by 7.4 million to now current assets minus total liabilities of 198 million. So they're fine there. Riot is next, and they have total current assets of 476 million. That also includes a lot of their HODL position. Total current liabilities of 107 million. So that's a current ratio of 4.4. That's great there. No worries on them. They do have total liabilities of 154 million. So they have no problem paying that off if need be. And their debt to equity ratio is 0.119 as well. And their current assets minus total liabilities gets them at 322. So no worries there. They did burn through quite a bit of cash for the Q3 compared to Q2, but they still have such a positive number here that I think they're going to be fine. So in all, I think the ones that are concerning, we know about Core. Marathon, I think, is going to be fine. TeraWolf is concerning. We'll see if they can weather it. Greenidge, we know now, is really concerning because of what they just reported. Mawson is something to keep an eye on for them. They might be one of the ones that may not be able to make it through, but we need to see updated numbers for them. Same thing for Soluna. Bitfarms, I'm pretty certain they're going to be fine. Based on where they are right now, they are improving. So we'll see Q4 numbers. And then Argo, we'll see how they come out of this after selling their Helios facility and everything. Okay, so I would say the top 6 here are of concern, minus Marathon here. Marathon, I think, should be okay. based on that their debt isn't due until 2026, and they're paying only 1% a month interest on it, or whatever that amount is. So you got basically Core, TeraWulf, Greenidge, Mawson, and Soluna are of concern. Those are the ones that I'd be really watching out this year to see if they are able to survive. Okay, as always, not financial advice. You guys have to do your own drill. Do your own and research drill. Been a long day. Okay, let's take a look at the miners, see how they did for the week, and we'll call it a day. Let me know what you guys think of this, if you guys agree or don't agree with it. But those are the ones that I would kind of stay away from right now. And then we'll see how things progress going forward. Okay, let's take a look at the weekly one. So this is the one where we look at Bitcoin versus the miners, see how they did this week. And we got Argo that kind of shot up a little bit here to 217% up for the week. And that was based on the news that they were selling their facility, not having to possibly go into bankruptcy. That shut up the stock quite nicely for them. Greenidge, surprisingly, went up 16%. Given that the news did come out just recently here, the 20th and the 23rd, it was beaten down here the last couple of weeks quite a bit. So it had a little bit of a bounce, but I'd still be concerned with that one. Okay. Next is Bitfarms was up 6.8, Iris was up 5.04, and CleanSpark was up 3.55 on the week. Mawson was flat at 0%, and Bitcoin was down 1.16%. So those are kind of our top performers here for the week compared to Bitcoin. Everybody else did worse. Hut being down 1.51%, BitDigital down 1.64%, Marathon 5.52%, Rye was down 7.88%, Sphere was down 8%, Hive was down 9.43%, DigiHost was down 9.55%, TeraWulf 12.99%, DMG down 18.7%, Soluna down 25.71%, and Core Scientific down 34.21%. So you can see here a little bit of concern with TeraWulf being down quite substantially along with Soluna as being down 25% on the 1 week chart. So let's take a look at the way it's stacked up here. So here's the charts for the 1 week. Let's take a look at the 4 weeks chart here, descending. And we can see here that Argo did better, 19.48% on the 4 weeks. Bitcoin's only down 3.10%, and everybody else here did worse than Bitcoin. CleanSpark was down 4.2%. Bitfarms 10.2%, Iris down 10.7%, Sphere down 13.7%, Hut down 15%, Ride down 19%, BitDigital down 20%, Mawson down 23%, Hive down 25%, DigiHost down 30%, Marathon down 31%, DMG down 32%, Greenidge down 42%, Core down 44%, TeraWulf 44%, and Soluna down 46%. So you can see that these 5 here, or these 4, and then where's the other one that we had as well as possibly not surviving 2023. Oh, which one was it? Oh, Mawson right there. But you can see these 4 are way down here in the 4 weeks. Let's take a look at the 8 weeks as well. In the 8 weeks, we'll see how those look right now. Argo was up 8.24% on the 8 weeks. Bitcoin's down 2.53%. CleanSpark's down 22.73%. Sphere is down 33%. Riot down 36%. TeraWulf and DMG down 41%. Mawson down 42%. We got a couple here. Hive and BitDigital down 45%. Hut 8 was down 46%. Bitfarms was down 48%. DigiHost down 49%. Iris down 57%. Core down 62%. Marathon down 64%. Greenidge down 68%. Soluna down 70%. And finally, on the 12-week chart, let's take a look at it. See how that stacks up. Bitcoin's down 13.46%, and everybody else has done worse. CleanSpark is down 27.92%. Sphere is down 29%. TeraWulf is down 38%. Riot down 41%. BitDigital 41%. DMG and Argo down 43%, along with Mawson. DigiHost down 49%. Bitfarms down 53%, along with Hut. Hive is down 55%. Iris down 63%. Marathon down 66%. Greenidge down 73%. Soluna down 85%. Core is down 93%. So we have been in a painful market here for the past couple of weeks. Well, pretty much this whole year. And I'm hoping that 2023 is going to be a better year. We'll see where things end up at. But the miners, like I said, are the ones to watch out for, are up here towards here. And I'm hoping for the best for them. It's been tough. They were buying at much higher prices than where things are right now for the miners, as far as the ASIC miners are concerned. So, they paid a lot higher price. Bitcoin has come down. Hash rate has gone up. all of those things contributed to the mess that we are kind of in right now, with a lot of the miners begging for mercy from their lenders. As far as 2023 is concerned, I think it's going to be a mixed year. I think the first half we're going to be kind of going sideways if we don't go down a little bit. Then maybe towards the second half of the year, we may start to climb back up a little bit as, one, the Fed stops raising interest rates potentially, and hopefully other world events kind of get better. We'll see. But that's it. I hope you guys enjoyed it. If you did, hit the like button, subscribe. Helps me out tremendously. Spreadsheet is always available to Patreon members. Thank you to everyone there for their continued support. Thank you so much for watching. Love you all. We'll see you guys tomorrow. Tomorrow we'll probably do a video on my prediction for 2023 as far as Bitcoin, and where as far as Bitcoin network hash rate is going to go potentially this year. We were pretty right on with my last year's prediction for 2022 as far as Bitcoin price and network hash rate. We'll see if we can match it again this year. This year's going to be a little bit more challenging because we've had a full year of bear market. Now we may end up going into more of a little bit of a bull market towards the end of the year. But we'll see. We'll come up with something, and then we'll also probably do a video on the miners that I'm looking to get into this year. So dollar cost averaging will continue. All right, that is it. I hope you guys have a great night. I'll see you guys in the next one.